Welcome to the MHP Exchange, where the riches are in the niches. We'll show you how to invest your way into mobile home parks with real strategies, tips, and behind-the-scenes know-how to grow your cash flow. Stick around. This is where smart investing begins.
I've been in real estate for 25 years. And during that time, I've had the opportunity of speaking with thousands of investors along the way. And most investors do not hit the goals that they've set for themselves. It's not because the market is bad. It's not because interest rates went the wrong way. It's not because they lack deal flow or because they started too late. They fail because they do not have the proper foundation to win. And I know if you're out there listening, you want to hit your goals that you set for yourself. We want to win. But the issue is most investors don't know who they are. They're moving along from chasing deals, right? Not understanding how the game is actually won. And right now, we're talking about raising the bar. We're talking about the frameworks that you need to help you to scale and hit those levels and hit your goals. Because if you don't understand the frameworks that you're locked in on, it doesn't matter the deal that you have, the foundation underneath you is already cracked. So let's get into it. Let's talk about the top 3 frameworks that every investor needs to have. And we're going to start with number 1. And the first thing that any investor needs to have is clarity. You have to understand when you're investing in real estate, you're not buying an address. You're buying a business. You're investing in a business, but you need to know what type of business you want to be in. And I've spoke with, like I said, thousands of investors, 25 years being an agent, being a broker. And most investors are chasing somebody else's deals. They heard somebody flipped a house, they want to start flipping. They heard somebody bought a mixed-use building, they want a deal like that. They heard somebody did this, and that's what they're looking at because they're chasing what their neighbor did. They don't understand what makes a good deal for them. What's their risk tolerance? What's their identity in real estate? For us, in what I was always an alternative investor looking at different opportunities. And now we've narrowed that focus into specifically manufactured housing. That's given me clarity. I know exactly what asset class we're looking for. I also understand the framework and the filters of what makes a deal work for us. And that makes us dangerous because when we find something that fits that criteria, we're ready to go in and go in deep. But you cannot build wealth on a fake identity, right? You can find some deals along the way, but you'll never hit those goals because the identity that you have as a real estate investor will dictate the type of deals that you look at. They'll dictate the type of returns that you're looking for. And if I had $1 for every time I spoke to an investor who said, I'm just looking for a deal, I'd have a whole heck of a lot more dollars, right? And I'd always ask an investor or somebody said they wanted to invest in real estate. I'd ask them to do 2 things. One, right? First thing is if you had $100,000 and you knew that $100,000 was safely secured into a piece of real estate, what would be the return that you need inside of 12 months for you to know that it was a good investment? Now, knowing that the greater the risk, the greater the return, right? So if you're going to tell me, Frank, I want 15% a year on that money, understand that you have to be willing to assume a greater degree of risk to potentially earn that 15%. So understand the type of investor you want to be. Are you investing for cash flow? Are you an equity builder? Are you looking at the velocity of money? Is that your goal? You have to understand that. And the second thing I would ask them to do is to think of this as a business. And if you were buying a business, what would be the first thing that you should do? You should be writing a business plan. And that will help you clarify who you are and what you're looking for out of that. That clarity is really the foundation of building wealth. The second part of this framework, which is so important as well, it's understanding expectations, right? And being clear on those expectations. Everybody, and I mean everybody, wants to find that property that's 25% below market value, that's already generating 10% cash flow, and there's tremendous amount of value creation in place there. I mean, everybody wants that. That is the unicorn that everybody's searching for. But the reality is, you cannot have all three of those things at the same time, right? You could buy at a discount. You can force appreciation. You can get cash flow, but it's not going to happen day one. Pick two, not three. Be realistic. What's most important for you day one? You might look at it as, and where you are and at your stage of investing or your stage in life, day one cash flow might be the most important thing for you. And that's great, because if it is, understand you're probably not buying at a discount. You probably don't have as much value creation there. That's okay, because you're going to receive more cash day one. On the flip side of it, you might be looking at building your balance sheet. You might say, I don't need, I'm not looking at where I am in the first 12 months. I want to know where I am inside the first 24 months. And I want to understand where my yield on cost is at that point. Now, if you're going in not expecting cash flow day one, you're probably looking at a double-digit yield on cost. And what do I mean by that? It means that the capital invested, whether it's to the equity or the improvements, I want to make sure that I'm generating a 10% return or better within 24 months. That's key. If you're going to discount the day one cash flow, you want to make sure that there's enough appreciation, there's enough value creation in there to justify waiting on that cash flow too. And if you're looking at deep discount value add opportunities, you're probably looking at that. And I know there's a lot of deals out there that tell you that you have all three, but I think understanding those expectations and being realistic with that helps you to be a more disciplined, realistic investor, and will help you hit your goals over the long run, because there's no shortcuts to it. And this goes back to having your identity in place, understanding where your tolerance is and what your expectations are there, so you can stay motivated and able to push through whatever challenges are going to happen, right? Because the market isn't fantasy, it's reality. And every once in a while, you'll walk into those unicorns, but the reality is there's a lot of good opportunity out there that have two of those three situations, but won't have all three. And lastly, on this three-legged chair that we're talking about and having that framework, it's having the operational intelligence to know what you need to do to pull those value levers on the ground. Because at the end of the day, this is a business not of bricks and sticks. This is a business not of spreadsheets, but it's of people and operations, and what you need to do to pull those value levers to hit your goals. We've come out of a market where for a period of time, whether you own a multifamily or you were owning other asset classes in real estate, operations really didn't matter much. The value creation was in the financing. When rates were going from 5 to 3, you were seeing a tremendous amount of value created. It didn't matter how good of an operator you were, the equity value was being created, and you could flip out of that property, do something else, and do it all over again. Now, as the life cycles of these properties are being extended, if you want to create real value, you're going back to, what it really takes to create value in real estate, which is operating that business efficiently, making sure that you have a desirable place to live, low tenant turnover, people wanting to go there and bring those rents to market, controlling expenses, improving collections, targeting improvements that drive value creation. And this is where a lot of quote unquote real estate investors get exposed. You have to know the levers and you have to know how to pull them, because that will separate you and will make that deal different. I mean, everybody likes to say, there's an old adage, like, you make your Eddie, and where you make your money when you buy. And that's right. You have to buy right, but you have to operate it correctly, because you can have the best asset in the world in the best location, but if you don't operate it correctly, you're never going to hit where the numbers where you need to hit, because of poor operations. And that's really what separates professionals from people who want to try real estate, right? And we've all heard of people who want to try real estate. We want you in there. We want you to win. We want to see you do well. We want to see you hit your goals. So we hope you found a lot of value in this episode, but I'm going to ask you all a question. For those of you listening out there, would you help someone you don't know learn about finding, funding, or operating their next real estate deal? If the answer is yes, then drop a rating and a review on the streaming platform that you're hearing this podcast on. That helps us reach more people who are looking to learn about real estate investing in the mobile home park space. And for doing that and sending it to us at the MHP Exchange, I'll make sure that we'll share with you our very own after site visit report. It is the same report that we use, that our team uses on the ground, to ensure that the business plan is being executed and that we're on track moving forward. Until next time, everyone, Frank Rizzo with the MHP Exchange. Happy investing.